Hey everybody, Dave Bartosiak with trending stocks at Zacks.com. Now, we always knew that cutting the cord from our cable companies would eventually lead to us spending twice as much on streaming services as we did on cable. This has led to a land grab of epic proportions in the streaming space. These platforms are pooling together content, bidding on streaming rights like cable stations used to do in the good old days. Now the difference? Now we get to pay $15 a piece for like 13 different streaming services instead of just forking the money over to Comcast for HBO and Showtime. Disney has been the most aggressive of the bunch recently with its Disney Plus platform. On Tuesday, the company announced a deal with NFL Media to bring NFL Network and NFL Red Zone to Hulu, but then last night, Disney signed a deal with Sony Pictures to bring Sony's titles to Disney Plus. The deal covers theatrical releases from 2022 to 2026 and begins for each film following Netflix's Pay One TV window. That means about 9 months after their theatrical run, you'll be able to stream these movies from your couch on Disney Plus. If you thought the streaming wars were rough a few years ago, it's all out World War III now. Let's take a look at Zacks.com and see which one of these streaming plays has the best earnings profile. First off, the Walt Disney Company, Zacks rank number 3 hold right now. And let's take a look at this price consensus in EPS surprise chart, because this is really the most powerful chart we have available on Zacks.com, because you can glean all types of information. The black line here represents the price, which corresponds to this right y-axis. Then you have these multicolored lines. Now these are the evolution of our Zacks consensus estimates over time. They correspond to this left y-axis. So here we could see earnings estimates 2018, 2019 sort of rolling over, going south. Obviously with the closing of their parks and such, that put a little bit of a strain on things. But we've bottomed out, and now look at these growth numbers. You can basically represent the growth as the difference between these lines here in the subsequent years. So you can see 2020, 2021, 2022, big time growth numbers. A little bit, while the actual EPS numbers themselves have come down, that growth is still there, and that's representative of the gap between these two. So starting to tick up a little bit, right? But again, Zacks rank number 3 hold, so it's not quite the time for Disney. And now let's take a look at Sony here. Now Sony's interesting because they're in the middle here. They're not really doing their own streaming service, but rather they're letting Disney and Netflix and others go ahead and license the rights to their stuff. So Sony is also currently Zacks rank number 3 hold. But take a look at this price consensus EPS surprise chart. It looks different from what we're seeing over on the Disney side. So here, it's been pretty consistent. Look at all these nice earnings beats too. It looks like the last miss on earnings was back in the spring of 2020. That brought estimates down temporarily, but since then we've had sort of an upward trajectory. So even though this is a Zacks rank number 3 hold, it's kind of nice where these numbers are moving. So in a positive direction, if I had to choose between Sony and Disney, I think I'd be going with Disney there. Now, here's Netflix, also Zacks rank number 3 hold. And again, let's take a look at this price consensus EPS surprise chart. It looks better than you're seeing in the other two. So I have sort of this clear delineation where estimates were coming down 2018, 2019, 2020. You still had the growth, but kind of ticking down, right? And then this year, pretty solid. We got some upticks there in 2021, 2022. So things are looking up there for Netflix in the positive direction. It was still Zacks rank number 3 hold right now. Also recently reported earnings. Well, thanks a lot, Dave, for giving me 2 Zacks rank number 3 holds. You're useless. Nope, I got one for you, folks. Actually, Fox Corporation, surprisingly, is a Zacks rank number 1 strong buy. That's right, Fox. Now, a little bit different here, right? You're probably not going to go ahead and buy the Fox Now app outside of your cable package and go ahead and just watch that. So it's a little bit different. This is just something that you can stream if you already have an existing, cable platform. But pretty much everybody, right? If we got the internet, you're going to end up having one of these platforms, whether it's a Hulu Live subscription or whatever it is. Now, take a look here. Real negative throughout 2019 and 2020, but now look at what's happened. Coming off the trough, everything pushing to the upside. So not only do you have year-over-year growth, but you have these under-promising and over-delivering earnings profiles here. That's something that you definitely want to see. And again, a beat. The beat goes on. So far, so good for Fox. Hey, so amongst all these initial companies I'm looking at during the streaming war right now, I think Fox is pretty decent, taking sort of the Sony model and applying it here. So maybe that is the way to play these stocks over the intermediate term. Every time you share this video, somebody spends 15 minutes trying to figure out which streaming service they can see Season 1, Episode 2 of Drunk History. Follow the author, subscribe to the YouTube channel, check out Zacks.com/promo for this week's smoking hot deal on our home study course, Twitter @Bartosiastics, and come back for all the trending stocks with Zacks.com. I'm Dave Bartosiak.